Преминаваме към разговора с нашия гост тази вечер, заедно с Корал от Tanto Capital Partners, управляващ съдружник на компанията, също така с един дългогодишен стаж в Мерил Линч, ВТБ и други големи финансови институции. Good evening, Mr. Oscoral. Thank you for joining us.
Pleasure.
Tell us more about Tanto Capital's activities and which markets are on your focus.
Well, Tanto Capital focuses in asset classes across infrastructure, energy and power and financials across a variety of countries. So we are region agnostic, but predominantly our focus invariably ends up being in emerging markets, but global emerging markets.
Let's talk about the turmoil in Turkey the last weeks. How the strategy of your company has changed?
Well, look, from a perspective of our strategy in Turkey, it has not changed because we are effectively long-term investors in Turkey. We consider Turkey as a very important hub, not just for the local markets, but also for the regional markets around it. So frankly, from our perspective, nothing has changed.
So you're optimist?
We are optimistic, of course. I think in the long term, Turkey is bright. The future is quite bright. In the short term, maybe there's a little bit of volatility, as we're all living right now. But frankly, for the long term, I think we are very bullish.
But according to some reports, the attempted coup in Turkey has cost the country $90 billion. Is that something realistic?
Well, frankly, I don't think it's a realistic number, because let's look at some things, right? I mean, the attempted coup was an extremely significant event in the history of Turkey, as it would be in the history of any country that went through something like this. And yet you look at the markets, and the dollar TL is actually stabilizing around 3. The stock market, having lost about 7.5% in day one, which is effectively a bad day for any stock market in the world, has stabilized. So therefore, it's actually, from our perspective, a certain amount of money may have gone out, and that will usually be hot money inflows that normally come in and out of countries. But considering what has happened, what has transpired on the 15th of July, we think that $90 billion is quite an unrealistic number, because the markets don't feel like $90 billion have come out, basically.
So it's safe to invest in Turkey right now?
Look, I mean, it depends on what you're investing in. It's safe to invest in Turkey if you're investing in the long term. Turkey has, if anything, throughout this event, from our perspective, let's be mindful of the fact that Tanto Capital Partners is not a Turkish firm. It's an international firm. We invest in a variety of countries. So we are effectively quite agnostic in terms of, or non-emotional in terms of, markets or countries. But when we take a look at it, the country effectively has passed through what is probably one of the most severe stress tests that any country can pass through. So effectively, is it safe to invest in Turkey? Absolutely. What are you investing in? Which asset classes? I think any investor would be focusing on the asset classes in question, and we see Turkey as a pretty bright market to invest in, especially if you're considering long-term infrastructure,
Which
energy
sectors?
and power. Infrastructure and energy and power in particular, I think, are the hot sectors in Turkey.
Why is that?
Look, Turkey is very simple. Turkey is a large country within the G20 countries in the world, and yet it's growing quite significantly in comparison to other G20 countries. There's a young, dynamic population, and demographics are on its side. Now, what does this mean? That means that you will always need to have infrastructure that needs investment in a country like that. And given Turkey's chronic energy shortage, and which, by the way, causes a part of its current account deficit, Turkey will have to invest continuously in all sorts of energy projects. So those two sectors, energy and power and infrastructure, for us are great long-term plays when it comes to a country like Turkey.
But we can't miss the political risk.
Well, look, political risk is true for every country we take a look at, including Turkey. We can argue that Greece has a political risk, Brazil has a political risk, Russia has a political risk. Even UK, after the Brexit vote, has a political risk. And in fact, I'll go out and say, even US potentially, if Donald Trump was to win the elections, potentially has a political risk. So I think every country has an element of political risk. Now, when it comes to Turkey, the question is very fair. in that we have been getting a lot of questions around the world asking, well, what's happening politically? And I think it's quite important to clarify that from our perspective, again, as investors, Turkey has really managed, via the population, by the way, to overcome what would have been a catastrophic set of events if the attempted coup had succeeded. And from our perspective, well, my perspective, very, very individually, what I found, with hindsight, of course, the positive slant on this is that regardless of whether people were AKP supporters or President Erdogan supporters or the opposition party supporters, they all came to the streets to protest against what would have been an intervention, an artificial intervention in democracy. So therefore, political uncertainty for a while, yes. Is that going to make a difference in the longer term for investments that we're talking about? I think no. Will hot money inflows, for example, going into equity markets or bonds, will that be volatile? For the short term, yes.
What are your expectations on Turkish central bank policy?
Look, Turkish central bank policy...
And of course the lira.
The lira, of course, is linked to that. Look, Turkish central bank continues to go through a reduction of rates, which I think they will slow down and settle on the back of the uncertainties right now. I think lira is also dependent on not just the central bank policy on Turkey, but what's happening within the EM basket versus the US dollar in particular. So I think it will be a correlation of the inflation numbers coming out in the country, the aggressiveness within which Janet Yellen will look to potentially continue the rate hiking cycle in the US, combined with the Turkish central bank. So all in all, I would forecast not a significant further devaluation on Turkish lira, but if you have to give a range, and I don't particularly like giving ranges for currencies because, as you know, in the world, across the world, for lack of a better word, we are in currency wars. So, a lot of things are going on. But I would say that probably between 3 to 320 range is a fair range to take until the end of the year.
You say something about the policy of the Federal Reserve. Is that going to happen, the rate hikes?
Well, look, if you take a look at the statement of the New York Fed chairman, they're taking yet again a dovish stand on that. Frankly, I think I am one of the believers that they will have another rate hike during the course of 2016, if for nothing else, in order to send a signal of normalization to the market, because someone has to do this, right? So I am of the view that they will continue, but it will not be an aggressive continuation. I think they will do maybe 25 basis points, maybe rolling 12 months, 50 basis points. But frankly, it also depends on what happens within Europe, within the Brexit, within the US election cycle, and global economic growth. So I think they will, but I don't think it will be an aggressive hike.
What will happen with the euro?
With the euro?
Yeah.
Well, look, I mean, I've always said this, and I'll say it again. If you take a look at the fundamentals of what's happening in the market right now, just the pure macroeconomic fundamentals, we should have seen a parity, right? Because you look at the US has turned around the corner, more or less. You look at Europe has significant structural problems that is not going to go away anytime soon. Furthermore, ECB is going to continue the monetary policy it currently has, so printing money, quantitative easing 2, perhaps 3. Well, in this backdrop, we should see downward pressures taking euro down to a parity. We seem to be stuck at 110 to 112, and I do think that there is an element of speculative flows behind that are stopping euro from devaluing too much, because it will eventually hurt US exporters significantly if there was to be a parity between US and dollar and euro.
Which are the most interesting assets right now on the international markets?
Look, what we like are assets and opportunities, rather, that tap into any sort of natural inflation, if you can find one, using and benefiting from the change in the regulatory rules via the Volcker rule, via Basel III, that impacts especially European banks and their balance sheets. So there will be a lot of assets that are coming out for sale that the banks have to sell in order to shore up their capital base in Europe. So being able to tap those opportunistic assets are important. And again, in the long term, depending on what kind of investor you are, by the way, and what kind of risk profile you carry, any asset class that will be intrinsic to the growth that will be coming from the world, which probably means emerging markets, which probably means infrastructure and energy and power in the long term.
Can we say that the emerging markets are more interesting right now than the development markets?
Well, first of all, how do you divide developed and emerging markets, right? You can argue that Italy is a developed market, but it's very interesting right now. So, and you can argue that, okay, well, you look at emerging markets, you look at certain Asian countries, or you look at Mexico, that are actually behaving more like developed markets. I think it depends on what risk profile you carry. The reality is we see a significant cross-asset, cross-jurisdiction turbulence in the global markets right now. So as long as investors are able to cherry-pick exactly which countries they're going into and what risk-adjusted returns they're targeting, I think every country is interesting at the moment. I don't think it's fair to classify it as just emerging markets being more interesting than developed markets.
And one final question, what poses the biggest risk for the global economy right now?
Well, look, I'll name you two or three. I think number one, the unfortunate spread of what seems to be an increasing epidemic of global terror, which unfortunately is impacting every country, not just emerging market countries. On the macro level, the deflationary environment that we all seem to be heading towards, especially within the developed markets. I think that you'll find that the deflationary pressures both in Europe and also in the US are going to play a huge, significant role over the next 4 to 5 years. And what I would say finally is the geopolitical landscape changing quite significantly, with in particular Asia-Pacific heating up between the battle of United States versus China taking more of an aggressive tone over the next 2 to 3 years.
Thank you for your participation here in our show, Mr. Ускорал. Това беше Озан Ускорал от Tanto Capital, с който разговаряхме за ситуацията на международните пазари. С това Инвестбук завършва. Останете с програмата на Bloomberg TV България. След малко започва Светът е бизнес с Ивайло Лаков.